My name is Dilip Shah. I'm an economist with 15 years of experience in both the private and public sector. I've been entering the ERC competition since 2013, and the reason why I've been invited to be a Titan is due to my successful record in the competition, having won the competition twice and finished in the top 10 all but one of the other 6 years. So the UK economy is due to grow at 1.2% this year. This is unspectacular in the sense that, well, you could think it's below the trend rate of growth, but it's actually in line with a number of other major advanced economies. For example, similar to France and Canada, we are lagging compared to the United States, but outperforming Germany and Japan. So we're middle of the pack, really. But really, the main story has been the impact of various Brexit deadlines on the economy. So we've seen a lot of volatility. We've seen the first quarter of this year, the economy grew at a strong rate of 0.6% due to stockpiling pre-no deal Brexit, and that was followed by a 0.2% contraction as when Brexit didn't happen in March, businesses ran down their stocks. Then we returned to growth again, 0.3% growth in 2019 quarter three. Again, that was just a rebound from a depressed level in the previous quarter, and we're kind of due to achieve around flat growth in the final quarter of this year. So my forecast is that we will flatline in the first quarter of the forecast period, which is 2019 quarter four. We've seen today release of 0% growth in the month of October. There are a number of factors which will keep growth subdued in this quarter. For example, there was a mini shutdown of automotive plants. For example, Jaguar and Land Rover shut down for a week. We are also kind of hit by election and EU exit date related uncertainty. Going further out, conditioned on a Conservative majority, which is kind of implied at about 75% odds currently. What we should get is the passing of the withdrawal agreement in January 2020, and that should ease some of the Brexit-related uncertainty, which has been holding back investment in 2019. So as a result of that and the kind of tail risk of a no-deal Brexit subsiding and generally the global economy starting to stabilize, I'm expecting a return to growth with 0.3% growth in quarters 1 and 2 of 2020, and then a further strengthening with growth of 0.4% in 2020 quarter 3. My forecast is that well, inflation is currently at 1.5% in the latest release. I'm expecting it to remain at that level in 2019 quarter 4 and 2020 quarter 1, and then I'm expecting inflation to fall further towards 1%. The main reasons behind that are that since the no-deal Brexit has been, the probability of no-deal Brexit has been declining, businesses have started to invest and confidence is picking up, especially relative to the Eurozone. So our exchange rate is rising, and that will help keep down imported goods inflation in particular. Furthermore, there are a number of regulated prices, for example, gas and electricity prices and water which are expected to decline in the coming quarters. I'm expecting average earnings of around 3.5% in the first 2 quarters of the forecast, and then moderating back down just below 3%. The reasons for that is that the lower growth that we've seen in recent quarters has opened up a bit of spare capacity in the labour market. That's undermined firms' demand for labour, and that's why I'm expecting average earnings growth to moderate. I'm expecting unemployment to be stable at 3.8%, which is at its current rate. The reasons for that is that my forecast is for the UK economy to grow at roughly at its trend rate of growth, so that it's consistent with stable unemployment. What we've seen since the global financial crisis is that productivity growth has always surprised on the downside, and unemployment tends to surprise on the upside, in the sense that unemployment declines more than is expected. I'm expecting that to come to an end with stable unemployment, just because growth is now slower than it was in previous years. I'm forecasting that the Bank of England will leave interest rates unchanged at 0.75%. The main reasons for that is that I'm expecting the weakness that we're having in this quarter to be temporary, and growth to return to its trend rate of growth. Although inflation will be significantly below the Bank of England's inflation target of 2% during 2020, the Bank of England's own analysis suggests that this is due to temporary factors, and therefore it's likely to look through that undershoot and more target inflation coming back to target in 2021 and 22, in which case there wouldn't be any need to reduce interest rates to support the inflation outlook. My black swan event is the UK general election outcome. So currently there is a 75% probability of a Conservative victory, but there is the chance of a hung parliament. A hung parliament or a win for Labour would significantly change the fiscal outlook, as Labour have plans to spend significantly more, tax significantly more, and nationalise a number of utilities. What the market reaction to that is likely to be is a decline in the value of the pound, and that would likely push up inflation and squeeze consumer spending in the short run.